Hello everybody, today is June 21st, 2023, and this is my experiment investing $1 a day in multiple different cryptocurrencies and $1 a day in multiple different dividend stocks. So if you haven't watched my previous video on June 14th, I highly recommend it because many things had to change. The things that had to change was Robinhood was forcing me to sell several of my different cryptocurrencies before June 27th, so I just decided to sell it when it was near or close to its highest point. I also talked about tax loss harvesting and how it exactly works with cryptocurrencies from my understanding, my own opinion, and also tax loss harvesting for other type of things. So the other thing that has also changed as well, if you come down here and you look, I have started investing in Microsoft and I have started investing in Apple. So I took the profit, or not the profits, the losses that I had from the cryptocurrencies, and I moved it over to Apple and Microsoft, being that looking at for the long term, the long horizon. The other thing that has also changed as well is I started investing in ETFs. So I started investing in JEPI, JEPQ, QQQ, and VOO. Now, the main reason why I started investing in these is a totally different plan. You can read different articles. People will say maybe not investing in a cash or a dividend like type of ETF because you have to pay taxes on it. Instead, you should probably put it in a RIA so you don't get the taxes from it. This is in a cash account. So even if I get paid out from JEPI or JEPQ, I still get taxed from them at the end of the year. Now, for the long term, I'm looking to get cash as well as a growth ETF. If you don't know what QQQ is, I recommend researching it or looking it up. Understand what it is. It is basically, in a nutshell, a group of a bundle of different stocks that are all grouped up together that you're following along. So it's much like an index fund, except instead of trading individually, you're trading just the actual ETF itself. And it's bunched up and it's on all these different ones where it's 51% of stocks are technology for QQQ. Where if I come over here to VOO, VOO is also heavy in technology as well, but is also dispersed out between other different stocks within the S&P 500, and they're managed by two different companies. Now, JEPB and JEPQ are managed by JP Morgan, but the main reason why I'm investing in these two is they are actually significantly different. One only has 17.34% in technology, where if I come over here to JEPQ, and JEPQ, well, both of these are dividend producing stocks. This one is much more heavy in technology. 50% of their stocks holdings are in technology. So both of them have done very well, even though they've only been released not too long ago. They've been doing very well. And so for the long term, I'm going to hold on to them. And I have different goals, different plans for these. I have also changed my strategy for how I'm doing all my different stocks. So all my different stocks, instead of doing just $1 a day, I have now changed them. And I've changed many of them. I'm also not doing so heavily in finance there. A lot of those other ones that I have, those ETFs, are not heavy in finance. But what I am doing here is stuff for like CWH and all the other ones. I've changed these to be $1 a week. So it's a weekly buy for $1 a week. And then I've also changed my strategy here where these ones, these bottom ones, so O, Main, SLRC, Gain, SLG, Good, and EFC, these ones that pay monthly dividends, I am still investing $1 a day every single day. So this is a daily buy for these ones because I'm focusing on dividends, and these are all financial ones. So I'm changing it up so finance ones were QQQ and VOO, not so heavily in finance, so I still want to keep my holdings in there. I am not actually investing so heavily in these ones, $1 a week. And then what I've also changed here is now I'm investing more heavily in ETFs to get these up, and I'm probably just going to keep it and leave it that way. So what I'm doing here for QQQ is I'm doing $12 a day. So I'm taking the same amount and I dispersed it out from all those other different dividend stocks, and now I'm dumping them in growth stocks or a growth ETF for QQQ. Now there's also another one as well, which is QQQM, and QQQM is the child of QQQ. The differences between QQQ and QQM is the fact of your your expense ratio, which I don't know, did they really actually reduce the expense ratio to 2.2? It used to be, I guess it is zero point 0.2. Yes, QQQ is zero point 0.2. JEPI and JEPQ are the ones that are 0.3. So QQQ is zero point 0.2, and QQQM is 0.15. So almost 0.05 less for expense ratio, but it is identical, but it has less money in that particular sense. So I actually have it on my watch list here for ETF, and I have QQM right here. So QQM, it is less. It's a newer one that came out. It was only released October 13th, 2020, but it's identical to QQQ, but its expense ratio is less. What that means is they charge you 0.15 of a percent of whatever money you have invested. So for QQQ, they do a 0.02% of whatever I have invested, and they charge me for that. And so if you're going to do ETFs, be aware that you're going to be charged for that. And also be aware if you're going to do an ETF that's a dividend paying ETF, which JEPI and JEPQ are, you get taxed for all the dividend money that comes in. And so that's why some people say put it in a Roth, put it in an RIA, and fund it that way so that it just grows and it's not taxed. Where here, I not only do I have the fee of 0.35% of whatever I have in JEPI, I have to pay this fee as well, and it just comes right out of my investments. I also have to pay for all the taxes on all the dividends that get paid out for it. And currently it's around 11-12%. That fluctuates, and I'm not too worried about it. I'm doing it for the long run. So the other thing that I've also changed as well, because I had to change it up, and I'm going to sell a bunch of my stocks with tax loss harvesting. So I created a watch list, which is the future. So July 19th. On July 19th, I have 10 stocks that I can choose at the time after July 19th to sell at a loss, and then wait the 31 days after that to get tax loss harvesting on those if I so choose. I'm planning to just hold on to them until they either turn positive. If they never turn positive, I don't want them a part of my portfolio anymore, and I want to be able to get tax loss harvesting, because you have to do, for tax loss harvesting, you have to do 30 days before and 30 days after. So full 60 days you cannot purchase them. So I've completely paused all transactions for the stocks that I don't want to have anymore. And what I did was I created a watch list. So say for example, there's one that I don't want, and I can say I want to sell July 22nd, so 30 days from now. And if I were to create this, and then I were to search for a stock that I don't want anymore, say for example, I didn't want Apple for whatever reason, and I didn't want my Apple stock, I can say I put this in my watch list, and then I know for on July 22nd, if I didn't want Apple anymore and I wanted to sell at a loss, I could, and as long as I don't purchase Apple or any similar like stocks, identical similar like stocks within 30 days, I can get tax loss harvesting. And you get tax loss harvesting up to $3,000, and that rolls over indefinitely. And you can only get tax loss harvesting based on what type of trade it is. If you're a day trader and sell within less than a year, that's a short sale. If you're not a day trader but an investor and sell within a year time frame of it, then you only get tax loss harvesting for those ones, long-term investments, ones that are actually investments and not like a day trader and not like a short sale. So some things you need to think about. Now, I'm not a financial advisor. I'm not a tax expert. This is just my own opinion of what I've read, what I've researched, and I'm doing this for myself. I don't need that actual watch list. I was just showing you as an example. I don't want to get in trouble in any sense to show you what I'm actually selling, but that's the idea behind it. You'll realize it after I actually get rid of the stocks that I don't actually want, because I'm not trying to inform you, tell you what I'm selling and what I'm not selling. I'm just showing my results, showing my opinion, showing what I'm doing for myself, as I would consider myself still a newbie investor, but I'm still asking questions. I'm still learning. The most important thing, if you want to get good at something, is to ask questions and to try and keep trying. And even when you fail, which I've lost money, and I am losing money in that particular sense, because if I come over here to the year to date, I'm already down 2.86%, so $500 loss. I had to eat the loss from the cryptocurrency because Robinhood no longer supports the cryptocurrencies I no longer have listed here. It's in my previous video, it's gone. It doesn't exist anymore. Now I know I actually didn't show this real quick, so I'll show this. The dotted white line is the start of the day. You can see it goes down and then comes up. You come to the 1 week period. You can see right here it went down, and then it's still in a downward trend for 1 week. 1 month period, you can see also it's still in a downward trend. We look at the 3 month period, very very heavily down year to date, and you can see right here January 6, 2023 is the first time investing in my life in that sense. And then over here it's just constantly in a downward trend. But I'm not worried about it because I'm here for the long term. I'm investing for the long term, and I want to be for the long term. Now, another strategy that I was reading online that I was going through is doing in investments, ETFs, and I finally started investing ETFs after I did my own research for myself. If you are interested in ETFs, do your own research. Understand all the tax fees, understand all the implications, understand how tax loss harvesting and how taxes actually work with them. Do your own research for your own state. Talk to a financial advisor and let them inform you how it is for your situation, because I don't know your situation. So don't listen to me and what I'm doing and just showcasing this is what I'm doing for myself and what I'm learning, and I'm trying to spread that educational knowledge of what I've learned from my own experience doing investing. So what I learned, or at least what they explain, is QQQ invested for the long term. So this person invested in QQQ. He put in $60,000 27 years ago. Okay, $60,000, and he put no more money in. He did QQQ and he did SLD. I think. Hold on, let me pull it up. He did SPY. He had QQQ and SPY, two very high growth stocks, but growth ETFs, but very very different in many ways on the type of stocks that they've picked and what they're watching. And after $60,000 he put in and didn't put any more money in, but he had it in an RIA, so he didn't get the taxes from it in that sense as it grew, because QQQ and I'm going to mess up the name, so I got to pull it up again. And SPY, they do pay a tiny amount of dividends, but because he had it in an RIA, he didn't get the taxes on it. But anyways, after 27 years, it grew to 1,500,000. And then during that time, around 2020, 2022, it grew, and then it went down to 1,200,000. And then what he did was he got rid of most of his QQQ and SPY, and he changed it to dividend investing ones. So he changed it to cash ones because he's retired now, and he changed it to JEPI and JEPQ and a bunch of other ones as well. And he changed it so that he can just start making money in his retirement, because he doesn't have income anymore from his job. Because if you have income from your job, you get taxed from that, and you're in a different tax bracket. And then your dividends get taxed in whatever tax bracket you're in. So those are the type of things I was like, okay, and so that led me to researching more of, because I was afraid. I didn't know what ETFs were. I didn't understand it. Because when I come over here and I clicked into JEPQ, I'm looking at it, it's like, nowhere does it say that it pays an actual dividend, or easily jumping out at you to how much the dividend is and how much they actually pay. But JEPQ, JEPI, and JEPQ do pay a dividend, and they pay a very large percentage of a dividend right now. Now, they also say don't chase dividend yield. That's a newbie mistake. And I'm going to agree with them. I did the newbie mistake, and you can watch my previous videos. You can see how my thought process and all of it. I looked over here at UAN, and I looked over here at the dividend yield, and I saw 39.716%. And I was like, oh, wow, chase this dividend yield. It's such a high dividend yield. But just because it's a high dividend yield, when I did your research and you look at the historical of UAN, they don't always pay that high of a dividend. They don't pay a historical high dividend. And that dividend is not guaranteed. They can cut their dividend at any time. So what I want to do is, my thought process, because I already dumped $2,000 into it, is when it goes up, you can catch the actual dividend. So catch the actual dividend payment, and then maybe sell it at a higher point. But that's day trader. Don't mess with it if you don't know what you're doing. Do your research. Don't listen to me. Do your own. But for me, for the long term, because you can even see here for the 5-year mark, they stopped paying their dividend around here. And the only reason it shot up was because all the resources had to change because of Russia being cut off temporarily, but they're going to open up again. And once the fertilizer gets opened up for Russia to be able to export all of those, it's going to impact UAN. Either that may happen or something else may happen. And UAN may skyrocket or it may not. But that's a gamble. If you want to have a constant dividend payment, look at companies that are constantly growing their dividend payment and paying. So if you look at Apple for 5 years, right? Apple's going to be a great example. So 5 years ago in 2018, they were only $46.92 a share. So if you bought a whole bunch of shares in Apple then, and they've obviously been increasing significantly, and even though their dividend payment is not high or doesn't look as enticing or a 0.5% dividend yield, if you bought them at $46 a share and not only bought them here at this lower price, it increases. They've also been increasing their dividend payment. So it's exponential. It's not just that you're buying a quality company that's going to most likely last. And that's what people were saying blue chip stocks. A blue chip stock is one that's you're not gambling in a sense. It's a pretty stable company, and it's probably still going to be here, and it has a long-term track record of being successful and going in that upward trend. So that's what they say with blue stock chips. And if you look at Warren Buffett and his profile, he mainly purchases blue stock chips, blue chip type of stocks to increase his portfolio, so he knows that he's going to constantly get a dividend payment. Now, some people don't like dividend payments because you get taxed, and if you put it in a cash type of account like I have mine in, I don't have it in an IRA. I'm going to get taxed on all my dividends, all my payments, however I get paid. So something to think about. Lots of changes, changing up my actual strategy, changing up how I'm actually doing it. We'll see how this goes. I'm posting once a week, every Wednesday, as best I can. This is, my what I'm posting, what I have here. Now next week, Wednesday, I will not be here, so I'll probably post a day earlier. I'll probably post on Tuesday because I am going traveling and we're going on vacation with my family to enjoy some good PTO time. If you enjoyed this content, please smash the like button. Please leave me a comment. Tell me what you like. Tell me what you don't like. If you haven't subscribed, feel free to subscribe. If you don't want to subscribe, that's okay. Come back once a week, once a month. Check out how this is doing. Thank you all for supporting me. Thank you all for being here. You all have a wonderful rest of your day.